Right, is everyone here? And can everyone hear me?
Hello, yeah.
Okay, that's great. Okay, so welcome to today's stream, 23rd of November. And so first of all, I hope everyone had a good weekend. Everyone is here. Yeah, we had a fantastic Monday on DAX. Let's first go through what happened at the London Open. So I've already marked it. This is where the London is. So that's 1 minute. And Emma pointed out that at 8:30 today, there were news. The London, or basically all the major countries of Europe, Germany and France, I think. The PMI news are important. So they came out. But sometimes before the news, market starts to move. And that's exactly what it did. Gave it a setup. But the low bot today, I did not trade it because on the 15-second chart I was watching it, it didn't do something that I look for. Okay, so this is where the question comes, and this is why we are streaming this. So today's topic is those two questions that Doug asked, right? So I'll go back to those questions, or you want to ask them yourself, Doug? This is, I think, a good example of that.
Yeah, just wanted clarifying on them. They're not that clear on the flow chart, so I kind of think I know what they mean. But
it's a good question. It's a good question. Like I said, I think I could probably do a video series on the flow chart. But obviously, the flow chart does not explain it. I know that, and everyone else should know that, because the flow chart is a concise way. So I'll bring the flow chart up. Okay, so here we go. So you see the flow chart, and the flow chart is basically, it is a flow chart. So that's what flow charts do. You do step by step. There's a process that has been broken down into steps, and it tells you what to do by simply following the binary 0-1 concept. If yes, you go to the blue box. If red, you go to, if no, you go to the red box, and that then dictates, tells you where to go. So your question was about these two orange boxes, am I right?
yeah, that's right, mate. Yeah.
So I'll also address why they're colored. So the blue boxes basically go to the next box, the next blue box, and the red box is basically you can't continue the process. You have to go back, and the red box tells you to no trade. I mean, it's a decision as well. So it's a decision-making flow chart. The orange boxes are discretion required boxes. And this is where, this is why trading requires traders' discretion. And if these orange boxes were not needed, if we could turn them blue, then we could just code this into an expert advisor and just go to the Bahamas if this was possible. But that's that little bit of discretion that we have to do. And of course, it's not just these, it's other things as well. When to start, when not to start, blah, blah. All those can be coded, but this is an interesting question, like, is exit point close enough? Obviously, when you create a flow chart, you cannot really explain everything into it. The flow chart is a mechanism for the person who actually understands what this process is, and then it's written here in the shortest possible way to remind you of what it is. Is exit point close enough? It's a very important question. This actually relates to risk management. So the question of is exit point close enough is actually a risk management question. And then the next one is M5 AIMS too close? So that one needs explaining as well. I need to find out that question which Doug put earlier in the chat room. In the 3 rules flowchart, what is meant by is the exit point close enough? And on the S2 flowchart, is there a fresh AIMS level after the dot? Okay, so these are 2 questions that I'm going to talk about. So let's go to the charts and address the first question. Is exit point close enough? So I'm assuming at this point that you know a little bit about, and I think the people who are in the chat room right now, they know a little bit about this. So the process is that you start with by looking at the dot. Obviously, this is now changed a bit. We don't necessarily look at the dot. We actually look at the 3 and the 4 on the AO or the E wave. Once we have the 3 and the 4, then we look for the dot. And we don't necessarily look for the dot. Actually, we look for that pattern where the box is closed and gator is sleeping. And then, obviously, this is the question, is the alligator asleep or awake? If it's asleep, you want a tight box. Is dot candle inside AIMS? That's a question. A lot of you understands that. If it's broken, then it's not going to be red candle. It's going to be pink. So you have to address it differently. And is purple line correct? Now, it is a question that is in the flowchart, but it is coded into the dots. So, but you still have to visually see it. Is the purple line correct? Obviously, the setup 1 concept that we have, we want the purple. So back in the days when the flowchart was first created, at that time you would have looked for purple kind of mingled or touching the gator. But obviously that's changed now. We want it to be not touching the gator, actually outside. And is AO close to zero line? That's a subjective thing again. This could also be an orange box actually. Because close to zero line is subjective. You don't know exactly what it is. It would be very difficult to code this as well to see, to tell the expert advisor what exactly is close to the zero line. You can probably do that for one market, suppose DAX. You could run your test and find out what is the accurate number. I'll go to the charts now in a bit actually. So this is difficult. And then comes, is exit point close enough? This is a risk management question and we will look at it now. So when we say, when you take a setup 1, you want to make sure that the box is not too big, right? You want to make sure box isn't big. And if the box is big, then you'd have to take a bigger risk. And this question, very simply, is another way of saying, is the box big? But it's a more objective way of saying it. So this question basically means that when you're making an entry, so suppose this was the setup. If this was the setup here, and that's your box level, so where will be your entry? Your entry would be 2 points above it, 19. And then you want to check where am I going to put my stop loss? It's going to be below the box, right? So if the entry is say 20 and the box is say 9, so you have to put your stop loss at 8. So that's 12 points or 10 points if it's at 18. So for the time frame that you're trading, you should know what is the optimum number. So I would say for a 10-second chart, 10 pips is an okay stop loss. And this would answer the question of, is exit point close enough? So exit point basically is a different way, that box literally asks a different way of asking, is the box tight enough? Because if the box is not tight enough, suppose if the box was this size, so your entry would be at 35. Let's actually expand that chart. So let's suppose I was taking an entry above this box. And suppose the gator was closed. Actually, let me just find a good example. Suppose I'm taking a setup 0 over here, and I'm taking an entry here. And I'm making my entry at 95. And now I'm asking the question, is exit close enough? Which automatically assumes that my stop loss is going to be on the other side of the box, because that's what the rule is. The stop loss is always on the other side of the box, and the lot size calculation is based on this distance. So if you're taking 1% risk and you make an entry at 96, your stop loss is going to be at 20 or 2 points above, so 22. So that is basically 26 point stop loss, which means now to get your 2R, which is the formula for the setup 1 success, you'll have to capture a 52 point profit. And if you trade this market a little bit, you will find out, I mean, even for a month or 2 months, you will find out that on a 15-second chart, getting a 50-point winner is not a normal trade. It's not going to happen every day. it will happen sometimes. It happened today, but it's very difficult to do that. Like, for example, if you were to enter here and you were lucky enough not to get a slippage because this was the news time, you did get a 50. But even for this, your stop loss was actually 10. So you got a 1:5 trade. Now, if your stop loss was 25 for this, because if the box was big, if let's say the box was here, should I draw a box? Okay, let's draw a box. Let's suppose this entry had a box like so. So if it had a box like this, suppose the price went from here to here like this, and so that ended up creating a big box, and then you were taking an entry, your entry would be 51, your stop loss would be 28. So that's a big stop loss. And because our target point is based on 2x of the stop loss, your target point will have to be far away up there. Now one can argue, okay, I can put my entry here and stop loss 10 below. Yes, that's fine. We can do that. But essentially what you'll be doing is that you are putting a stop loss based on what you want, not the market dictated locations. So what we want is to do is we want the market generated stop loss levels, which would be the box levels. So if the box was tight here, and suppose we got an entry at 50, the box is telling us to put our stop loss below the box, because that is where I will be proven wrong that this is not wave 4. Because I'm assuming this is 3 and this is 4 because Gator is asleep. AO is close to 0 line, that other orange box. So if you look at this, is AO close to 0 line? I can easily actually, we should have actually colored this as orange because it is kind of subjective. But maybe at that time for us it wasn't that subjective. We just thought it is like very obvious. But if you look at it, this would be considered as close to 0 line. But for a stage 1, we would say, well, there isn't a fresh cross. But if you look at it, you see the green and red are touching, and the blue line is inside the box. And visually, this box is tighter. So this would be a good example of is exit close enough. This would be not a good example. Well, this is not a good example for a trade anyway. But suppose the Gator was sleeping. This box visually is bigger. Obviously, this box is big. And this box is big as well. So it's all to do with risk management and what is potentially, what the market does. So if I took a trade here, I would require a very big stop loss. Obviously, as you guys know, if I took the trade here, my stop loss would be above this miniature swing high. So that way, if I take an entry here at 96, my stop loss would be at, let's say, 07. So that's just about 10 or 11 points. So it's still doable. And obviously, when it pulled back over here and came back to the box, I would be out. So this concept is also based on this understanding or another belief system that we have, or let's say a fact, is that inside a box, let me change to 1 minute chart. At any given point within a box, so this is the box low. See, for this swing low, this is the fractal low. And when price goes up and starts coming down, it creates a fractal box high. What we believe is that between a box low and a box high, there's always an Elliott wave of a certain degree. So that means the taller the box is, the taller the wave was inside it. And the taller the box is, the more chances it was an impulse wave. So when the box is tall and then it wants to come out of it, usually it would have completed quite a lot of waves in there. So suppose this is a range here, from here to here, and then price starts to come down and it hits this level. It's actually consumed quite a lot of pips going down. So chances are high, if it was to break on this side, that it's going to pull back. And usually those pullbacks will kick you out. So what we do is that instead of taking big boxes, we take the tighter boxes, because tighter boxes are indication that it's a sideways range going on inside. So our motto is higher probability setups are the ones that breakout in the direction of higher time frame trend. So if this is my higher time frame, believe it or not, for M1, for trading at the 15-second chart, the M1 is my higher time frame trade. So by higher time frame, I don't necessarily mean the hourly or the daily chart. It's relative term. This higher time frame is a relative term. So if I'm on the 15-second chart, my higher time frames are the 1 minute and the 5 minute chart. The H1 is an overall time frame for me in that perspective. So because I'm only trading the London Open, I'm only concerned about what happens slightly before the London Open over here, or the pre-market, and then I want to know what happens during the London Open. So that's all I want to do. So that's the first question. So Doug, is the first question clear?
Oh yeah, 100%. Yeah, brilliant.
So,
good. Absolutely fantastic. Yeah, got it.
That's great. So the just to repeat it one more time, is exit point close enough? This is basically a risk management question, and it in other words, which we normally repeat ourselves quite a lot of the time, we say the box is big. Basically what we're saying, exit point is far. And we're also saying that this would require a larger, bigger move for me to actually extract enough profit, which means it's not feasible. So the risk becomes higher. So I'm risking 25 points and I need 50 points for success on a 15-second chart. No, that's not good. What are the chances of market moving 10 points in one direction on a 15-second chart? Those chances are higher probability. I once had access to a very detailed study somebody did, some university people did on different Forex pairs and stocks, and they found out what were the probability of 1 pip move, 3 pip moves, 5 pip moves, 10, 15, all of that, like that, in the next, for different time frame, intraday time frames. And it was common sense that the probability, the smaller the number was, the higher the probability of move in that direction. So let's say you take the example of a DAX. What is the probability of a 1 minute chart? Let's say the trend is confirmed. What is the probability of it moving in the bullish direction 10 points compared to the probability of it moving in that direction without pulling back of 30 points? So obviously the 10 points will have a higher probability. The 5 points will even have a highest probability from this. But what is the probability of it moving 50 points? Probably very low every day, because it doesn't move 50 points that often compared to 10 points. So that's why for a 1 minute chart, anything above 10, 15 points, the size of the box, is actually too big, because the probability of getting a 30 or 40 point winner is quite low compared to probability of getting a 12, 15 or 20 point winner, you know. So that's how it goes. Anyway, so what's the next question? The next question was, is there a fresh AIMS levels after dot? Is that the question?
Yeah, that's it. Yeah.
Right. So this actually has to do with the dot mechanism, which I know you don't follow. But if you were to follow, let's say, the dot mechanism. So you look at the dot, and it's slightly confusing now, because this flowchart was originally written before we encoded, thanks to Steve, who coded this mechanism into the AIMS entry alert, v5.1, that now, if you look at the dot, and you come to this point, is dot candle inside AIMS? So what does that mean? So if, well, I don't have that chart right now, and we don't have the AIMS entry alert for this, but there will be a dot printed at certain point. Let me bring that. Let's create a dot somewhere. Actually, something like this. We can just do an arrow. No, there's a dot. There we go. So can somebody tell me from their charts, where do we have a blue dot on the 1 minute? Is it somewhere here below this candle?
It would be, yeah, because that's the cross back over
Yes.
the.
Actually, there will be probably one here or here as well. Could somebody check if
Definitely. Yeah.
1109 has a blue dot?
I don't have the dots, but that will definitely be one. Yeah, I'd say the one before it actually would be the blue, the dot.
Okay. So nobody can confirm that. That's not a problem. It's okay. I'll have a look.
1109, yes, there is, I think.
Okay, that's good. Yeah, yeah. I have a dot at 08 and 09, and I have a green dot at 9:51. Okay, so now I know where to go. Right. So you'd have a blue dot here, and this is blue dot because it's crossed above the green line. It's closed above the green line. We've also coded this that it is on the right side of the purple. So if it was down, it would be black. And there's another code in it that if the high, so at the time when it was printed, let's go back. We can actually, that's a very good mechanism in this. Let's see if we can take us back. Right. So at the time this fractal was not created, this candle was inside, so the most immediate box high and the most immediate box low for this candle were these 2 points. So this is the immediate box low, and this is the immediate box high. So the code would check whether the high has broken this high or not. So if this high or just the wick had broken this, then what it would do that it would print it as green, telling you that the high is already broken. Now why do we do that? We do that because our rules are that we put pending orders. We don't go market orders. And we always use the box highs and lows for setting the orders, as we all know. So if the box that you want to take has already been broken, then the question becomes, well, this is a setup, I want to take it, but the box high has already been broken. So where do I set up my pending order? And that is the question. So is dot candle inside AIMS box? AIMS, we used to call this box only AIMS. The name of this indicator used to be AIMS. And that's what it was, iTradeAIMS, which means I trade the boxes, or I trade the fractals. So basically this is fractal trading mechanism. The whole mechanism is that. So let's suppose we had a wick here that extended this high. Then we'd have a green candle. Let's color it green. Not green. Oh yeah, green. And if it's green, now you can't put a pending order here. So the mechanism at that time that we were following was, okay, if it's already broken, I don't have a fresh box high. Now what I will have to do is that I will have to wait for a new fresh box. So suppose it's here. Let's actually find out another example. I'm actually going to go and find an example for a green box. For a green. Okay, not the green. Let's do this one. I have this. Right? So that is not my green. Okay, hold on. Let me just change the color. Suppose this broke. Now what we'll have to do is that I will have to, instead of putting a pending order here, I will now have to wait if price creates either a box high at this level or goes up and then comes back, comes down and creates a new level. So let's move the chart a little bit forward. So let's make another supposition. Let's suppose we have a green dot here because it's broken the high. Is it clear until this point? Doug?
Yeah,
Yeah?
crystal clear, mate.
So let's suppose this is the dot candle And because it's broken the high of this box, it's printed green. So now we are waiting for a fresh new box. So we are waiting. There you go. Now we have a new box. Now what I'll do is that as soon as I've got this box, I will run through the flowchart again. So now what I'll do, because this is the old mechanism, is there a dot? I can say, is there a green dot? And if the answer is yes, is the alligator asleep or awake? You know, if it's still asleep, it's still sleeping, where it's kind of awake now, because, you know, you have a fresh box, it's awake. It automatically takes me to setup 2. Is there a fresh AIMS level off the dot? That is the question. So we have a dot, and then I have a fresh AIMS box high. My gator is open. Now I'm going to the next question. Is purple line correct? Yes. Why is it yes? Because purple line is not mingled with the gator and it's below the box, right? It's going in the right direction. And then we look at, is exit point close enough? That question comes again. Now I'm going to calculate, where is my entry? It's 87. It should be, so this is the level. Let's put a cross here. If I was going to make an entry here, it would be 2 points above, because that's normally, spread is 1.2, rounded to 2, a little bit of buffer as well. So my entry is at 90, and I'm going to calculate, when will I be proven wrong? When will I know that actually this is not moving up if it breaks this low? Well, ideally it's the low of wave 4, but that's your earlier. So these are the two things you need to keep in mind. So if this is your box high, but not the lowest point of wave 4, this is your preliminary exit point. Ideally, your exit point is this, because this is where you'll be proven wrong, that what you thought was a wave 4, bottom of wave 4, was not actually the bottom of wave 4. So if you calculate from this point of view, then you have an entry at 90, and the range of wave 4 actually is how much? 60, 30, that's quite a lot. About 30, right? More than 30. 35. But do we have a nearer level? Yes, we do. So this one comes to around 2025. We say, okay, this is about right, because on M1 chart, we can see that the market has moved, how much? I think it's moved around, in 31 bars, it's moved around 125, and then it's moved back from there, about 56. So yes, 60% of 125, it could probably move all the way there. So I'll make another assessment here, which I can do by using the target zone 1. So I'm explaining the whole setup 1 now, from here to here. So the target zone 1 gives me this level. Now I will count what is the distance between my entry, which is 90, and that. That's about 43. So I need to get 43 points, and my stop loss is 25. Not quite 2R, so not really a tight box, but doable, because if it moved around this level, because we have a distance of between 90 and 113, we have about 20 points distance, so that means 1R. If it moves 1R in my favor, I can move my stop loss to break even, and then I can put my target point there. So probably not 2R, slightly less than 2R, still doable. So let's suppose we took this trade based on this mechanism, and we move the chart forward. Obviously it wasn't triggered here. Let's remove that one for now. It went further down. Obviously we didn't see that move going up, so this would be cancelled anyway, but if it did go, this would be our target point. Obviously this is where price then went down. And let's suppose this was your entry and you took it, you'll be out here, right? So that's the concept, that these two, obviously all these questions are interlinked and they're interconnected. So based on the box, this is your fresh box. You took your pending order there, your stop loss here, you made your decision, all of that, 2R. So this is that little bit of subjectivity that comes into it that you cannot really code. So I hope your second question was answered as well.
Yeah, totally clear. Yeah, so just sort of moving on from that, just one more question. obviously these flow charts based on the M1, M5 trade.
Yeah.
Where it says is okay, so I use M1 on that, so unless M5's there as well.
Exactly. Yeah.
So okay, because I'm obviously on the S12.
Yes, this is relative. So if your current chart is the S12, then this would be M1. If your current chart is M15, then this would be the most relevant 5 times higher time frame. So you don't have, for M15, you don't have that odd chart, so you have the hourly chart. So hourly becomes your next chart. And if you are on the 4-hour chart, then obviously the daily chart becomes your next chart. So is M5, if you want me, I can actually look at this as well. So let's suppose, let me have 2 charts here. And let's have a 15-second chart here. Some nice up and down moves later on. Oh yes, good you actually mentioned that, because I wanted to talk about this. Why I didn't take this. You see, that was an interesting point. Bring him here. Actually delete everything and then bring it here. So this is my 15-second chart, this is my M1 chart, and I'm taking a trade here. And I'm asking all those questions, and then I come to this point. Is the 5 times higher time frame, AIMS box, close? Yeah, so where is it? It's at this level. Let me mark it. How can I mark it? Let's use this. So, as we can see, this was my box level. That's my 5 times higher time frame level. So where's my entry? My entry is 28. And what's that level? That's 39. That's only 2 points. So this is discretion. This is where you require discretion. You guys took it. I did not take it. My idea was, okay, this M5 level is very close to me. And then when I look further, this other level is also very close to me. So what do? I either take the risk of a rent, because, you know, the levels, there are 2 levels. Price could actually bounce and come back. Now it might kick me out. I either have to take that risk, or if I really want to take the trade, then I'll have to let it clear this level. And because this level is also closed, I'll have to let it clear that level as well. And then becomes the question, where is my exit? So the genius of Grant is this. He writes really nicely. If he had worded that question, is box too big? Then on a situation like this, that question would not apply. But if I'm making these decisions and then I finally come to the point, is exit point close enough? Then it would apply to this. Because when I make my entry here, where is my exit? My exit is here. So if I avoid this rent because of these levels, and then I allow the price to cross that level, but I put my stop loss on the other side of box, now my exit level is too far. Now I can't take the trade again. Again, a discretion. So I'll have to take 2 discretions to take this trade. And for that reason, I was out. So I waited for this instead. Took this trade. And let's suppose we ask that same question here. Okay, is the M5 box close enough? We have 57 and we have 49. 49, 57. It's quite enough. I need, on a 15-second chart, I needed more than 5 to 7 points. Up to 5-7 points, I can deal with it. But I would have still taken the discretion even if the level was here. Why? Because as we all know, this was the PMI news. And I like to trade news, especially when the pre-news direction is clear. Now, if it wasn't clear and I wasn't keen on it, then I would have waited for this. And guess what I would have done? Well, this. We have the nice, lovely pullback. So what I did was that I went long here. I took 70% off. It was a target point of 20. It hit that. And then, because I'd taken 0.7 off, I added back 0.5 at this level. and then I let them both go up. Then I got out 0.5 again here, and the 0.3 was still running, and then I got that here. So as a whole, I got 50 points, and my risk was 10. So this was a 1:5, not a 5% because I didn't take 5% because it was news. So I took a 0.5% risk, and that then gave me around 2.5% profit. And once this is done, then we are done. And one bonus question that I wanted to address was when Alina mentioned that she wasn't keen on, or she didn't take the down moves or something like this. And I think the market at that time was around doing this. And I wanted to point this out, that my main objective daily at the London Open is to catch the potential move, because DAX moves after London Open. So if I catch it at the low bot, you know, the initial spike, and like I said, it's not always going to happen. If you remember, Doc, I said to you the other day that it's not always going to happen. There will be days when it doesn't, right? And this is one of those days. You would have probably, if you went blindly with the low bot strategy, today would be your double loss. Going to be up and down. But that's okay. It works. I know how to avoid this. With time, you can learn which one to take, which ones not to take. And that's why low bot, the low bot breakout setup, the one that happens at the London Open, is the one that's not the easy. But the low bot with the pullback mechanism is easier. So for example, if you were taking it here and you took this pullback, fine, that's good. You manage it. You probably took a few pips or it was a break even. So the pullback is a lot easier. And so what I wanted to say was that once I see a move like this, a unidirectional move right after London Open, that's my job done. If you want to continue trading after that, then you'll have to go for momentum plays on setup 1. You can do that. You can go for pullback plays as well if you like. For example, when the market was now, you see here, as you can see on M1, price is stuck inside a box. I'm not going to touch the 15-second chart at all. But when it had a momentum breakout, and even below the purple, between these candles, there could be pullbacks, as you can see here. And these pullbacks can be taken. I did not take them because my target for the day and the week was hit anyway. So I don't want to risk that. So that's also a part of trading, day trading specifically, is that what are your daily targets? What are your daily stop loss targets? Cutoff points. You can't call it a target. I hate to call it a target. It's not my target that I hit my stop loss for the day. It's not my target. Obviously not my target. It's my cutoff point, a stop loss. So the daily stop loss is an important point. Which point do you hit first? Is it your profit target that you hit, or is it the cutoff point? So if you hit your cutoff point, that's where you have to throw your ego away. You have to accept the loss. You have to make that concession speech in time. Don't make excuses. When you've lost. You get out and you come back tomorrow. So that's what it is. Anything else?
No, it's good. Yeah, really good.
Right.
Not crystal clear on there, mate. Yeah. I'm kind of getting more into S2 trades now. That's why I was asking, because I'm now waiting till the S1's. I'm trying to get the S2 move after the S1, if you know what I mean by that.
Oh, yeah. S2s are very high probability trades. For example, I can give you, this can be considered S2 over here. This can be considered as an S2 as well. So basically, by definition, a second box out of the initial box. So when you have, where do you start counting? Well, the count starts where your AO is about to cross the zero line, or is it at zero line? Like this is at zero line, bobbing up and down. And Gator is asleep. So when the Gator is asleep and the purple is mingled, that's the 0 point. That's the anchor point that you have. That's where you want the market to leave that area. And this is what it did. So it left that area, pulled back. So this was your first break. So that's your first break. That's for the setup 0. It's not setup 1. And the second box over here, this was the second box, this becomes your S2. So there are two ways of looking for S2. One is the dot mechanism. When it's green, it becomes an S2. And the other one is when it starts from this kind of situation where it was a wave 0, right? And it comes up, comes down, and you have the second. This is your setup 2. This also is your setup 2. So every next box level can be your setup 2. And because it's less objective, this is more subjective.
Yeah.
That's why we ask beginners to actually work on their setup 1 first, because setup 1 is very objective comparatively.
All you need to really do is look for a small box with an open gator. It's so easy to spot.
They are,
as long as you don't go too far into the move, the wave.
yes. Like
I've done a lot of work on it over the weekend. It's huge. It's much better than the S1.
it is much better than the S1 if you think about it. If you look at it statistically, because most of the time setup 2s will be trades like this. You see, like this one, there's nothing to the left. There's nothing to the left. So what I do instead is that I want the setup 2 situation on the M1 chart, and then I take the setup 1 situation on the 12-second chart. So you see, you are getting in tune with my mindset now, and that's why if you stay, the guys who stick to the chat room and we trade together, that mindset gets fused, because so when you're understanding setup 2, your understanding of hunt methodology becomes clearer. So if you're considering this part here as a setup 2, let me mark it. See, this is a setup 2, isn't it? Because it's a box outside, there's nothing to the left. And guess what's here? We have a setup 1 here. So the idea was, okay, I'm taking setup 1 here, but my entry is slightly delayed, right?
Yeah.
So can I take an earlier entry? If I have a clear box, a clear stepping down box, like what you see here, then what I can do is that I can take an earlier entry. So basically all the good setup 1s on your current time frame will be a setup 2 on a 5 times higher time frame, or a hunt mechanism. So I think the penny is, not penny, I think the whole pound is dropping now.
Just a throwaway comment you made the other day saying S2s were better than S1s, and I started looking into it and I thought, well, I mean, yes, they are.
Oh yeah, definitely, yeah. Because S2s are within trending markets. They have nothing to the left. Everything is clear. Whereas for S1, you are hoping that the trend will resume. And the S2 has the trend is taking a pause. You cannot yet call it a consolidation. So over here on the M1, this is a pullback. It's not a consolidation. You cannot call this as a consolidation, because consolidation is very close to a range, right? Whereas if you break that down on a 15-second chart, it's a consolidation. It's a range. If you look at it, price is box, gator is inside. So it's a range, but you're assuming that because the overall market is in trend, the 5 times higher time frame is trending, and today even the hourly chart was trending, you're assuming that there's a higher probability of market resuming the trend as opposed to going down. And obviously when it moves a lot, then the probability of it going down becomes higher. And that becomes the fruit mindset, which I used to kind of teach everyone to trade fruit mechanism, but then they traded every fruit signal because they just look at signals. Everyone, beginners, everyone looks at that. But that's not it. Fruit is for reversals. And for reversal, you need to understand what is a trend, because when you understand a trend, you actually know where does a trend begin, and then you begin to learn how long does it stay as a trend, and then you begin to understand when is a trend not a trend. When it bends, it's not a trend anymore. And when a trend goes too far too fast, we all know now that when it moves too far too fast away from the gator, it would snap back.
Snap back.
And the snapback is the fruit mechanism. It's one of the hardest things to do, but some people, not everyone is the same. Some people actually see reversals far better, because
again, it requires a lot of patience as well.
A lot of patience, yes. So if you only look for reversals, in most cases you'll be sitting through the trends, which are the most beautiful moves, and then you start to go for reversals. I think reversal on its own, like only doing reversals, is not a good idea, you should have 50% of it at least. Like you should trade the trends, and then when the trend is about to end, you can have those smaller entry where you go for the reversals. But better than that, I think reversals in the direction of the higher time frame trends is even better. That's the Apple mechanism. So like if this is a wave down, or let's say if this is move down, but the higher time frame is uptrend, you would gladly take reversals over here if it's bounced against a level. So if you put the two things together, a strong move against the higher time frame trend, that's one. And the second thing is that it hits levels to the left. If these two things are there and you take those reversals, you will actually have the best entries a trader dreams of, because your risk will be just like 5 or 10, and it will be followed by 50, 60, 100, 200 points move. Difficult to time, but when you do time them, they're a lot of fun. All right. If anyone's got anything else, any questions, then we can discuss. Otherwise, we are done.
Yeah, no, that's brilliant. That made a lot of things clear.
Thank you for your question, Doug and Alina and everyone else. It's been lovely talking to all of you.
Yeah, thanks.
Catch you later.
Cheers. Bye.